Welcome. Today I'm going to talk to you about strategic investing. Now, I am an online entrepreneur, a strategic investor, and I'm going to show with you how strategic investing can help you build wealth, income, and lifestyle. So, the first thing we need to see is that the world is in a mess. You just have to open up a newspaper or look at the news, and you will see that we have high inflation, high interest rates, high energy bills, high cost of food, high fuel costs, high government borrowing. And once we have high government borrowing, we actually get higher taxes. And a word that is used a lot at the moment is crisis. So we have a pension crisis, a banking crisis, energy crisis, housing crisis, and an income crisis. Is it any wonder that people are feeling pretty down in the dumps at the moment? But I want to show you that the world is full of exciting possibilities. So when you see all these things that are happening that are really quite negative in the world and have a huge impact on us, I want you to get really excited about the possibilities that are out there. So who am I? So my name is Karen Newton. I have a background in taxation, banking, and entrepreneurship. I studied commercial law, quality management, and business management at university. I borrowed 300 on a credit card and turned it into 10 million in 4 years. I'm an online entrepreneur and a strategic investor, a 3 times #1 international best-selling author, and I'm semi-retired. I'm living in a small village in Spain, right on the beach, and I get to live my dream lifestyle. So where did I start? Well, my story actually starts in New Zealand, in this building. And this building was the start of 3 firsts on this day. The building had been purposely built for Eastern Central Savings Bank, who up until that stage were operating from a caravan. And they built this building, and it was the day it was opening. So it was a first for Eastern and Central Bank. It was a first because it was the very first ATM that went into New Zealand, and it went into this building. And it was a first because it was my first day of working for the bank. The bank went on to become a Trust Bank Central, which was one of the biggest banks in New Zealand. And I can say I absolutely loved banking. I loved everything that evolved around the systems, the way the markets work, and the way money flows, and just everything around banking I loved. And I was fortunate enough to be promoted several times, which saw me go into different aspects of banking and understand a lot more around the money markets. And then one day on my way home from work, my little yellow Mini, I had a car crash, a multiple car crash that saw me in hospital. And I found myself in a situation where it was really, really difficult times. I needed rehabilitation because it took me 2 years to learn to walk again after that car crash. I was lucky to be alive. It was only because I was strapped in my car had actually broken down that morning, and a friend had loaned me his car, which was the little yellow Mini, and it had a roll cage and a racing seat harness in it. And that was the only thing that saved my life that day. But I needed rehabilitation. And the day, well, about a week or two before I had the accident, the government changed how much treatment the government were prepared to pay under the health service for any kind of ailment. And they decided on this magic number of 19, and I could get 19 treatments. The thing was, I used those full 19 treatments in the first week. So I was in a position where I was having to pay for my rehabilitation. Now, the bank were absolutely incredible. They did everything possible to help me get back to work. But it soon became apparent that I couldn't handle the stress of banking. And it is a highly stressful. Most people don't realize how stressful banking is. They see a teller and that's their only reaction with people in the banking industry. It's what goes on behind the scenes, especially when we're working in the markets, we're working on mortgages, money and everything like that, transferring, borrowing, all that sorts of things. It gets very, very stressful. And it became apparent that I could not keep my job. I couldn't handle it anymore. So I ended up having to give up my job. So I found myself needing rehabilitation. I had no job and I had no income. So this is my life today. This is my husband and daughter, and lovely picture of my daughter with her partner. And we get to spend whatever quality time, whatever time we want with our family. This was actually celebrating Jesus's birthday, and we went out for morning coffees with him. I live, told you it's a little fishing village. I live here right on the beach in this lovely little cove, you can call it. And this is where I live. I think you can see the cursor moving on here. So this is where I live, right on the beach. I have a place up in the French Alps. Okay, and I have a little apartment here. It looks out over the valley with Mont Blanc in the distance. I get to drive the car of my dreams. Now, there is a little story about this car that I will share with you. And that is that when my husband and I were about to get married, we sat down and we talked about what was important to us, what each of us wanted from the marriage. And we set out that when we got to our silver wedding anniversary, we were going to celebrate it by going to Monaco and driving there in a Ferrari. We bought that Ferrari 1 year before our 25th wedding anniversary, and we did exactly that. We went to Monaco and we celebrated our wedding anniversary with a 2-week stay in Monaco. The other thing that's really important to me is charities, and I'm in a position where I am able to support the charities that mean the most to me. Okay, so my life is totally different now to what it used to be. So I want you to imagine for a moment, just sit back and think. I'm going to ask you some questions and just take a few moments to think about it. How would you feel if you had freedom of time? Just imagine you've got as much freedom of time as you want. You could spend more time with family and friends. How would that make you feel? Imagine you had no more stress around paying bills. Imagine you're able to go out with the family to a restaurant of choice. A lot of people have to look at what they can afford to go to. Just imagine that you don't have to worry about the cost. You can just go and enjoy a meal. Imagine you can give the kids treats, and I'm not talking about going and getting a little bag of sweets for them. I'm talking about you can send them on holidays. You can help them with home upgrades. You know, we helped our daughter with air conditioning, with plumbing, when she modifications to her kitchen. You know, we've been able to help her with lots of things. Imagine you could take a holiday anywhere you choose without worrying about the cost. How often do you look at a holiday and think, oh, if only I could afford that? You don't need to worry about it. You can do what you want to do. You can go where you want to go without worrying about the cost. Just for a moment, I want you to think, how does that make you feel? For me, it's a moment. There's no stress. Everything's off my shoulders, and I can just go and do what I want to do when I want to do it. Isn't that a really awesome feeling? So here's what I'm going to cover with you today. I'm going to be looking at strategic investing. I'm going to look at investment cycles. And if we've got time, I will show you how I made a 10 million in 4 years. So let's start looking at strategic investing. And I just want to give a disclaimer here because my results are not typical. Results will vary from person to person. You may not get the same results as me, or you may do better than me. Each person's results depend on their efforts, their understanding, the time they put into learning and applying what they can learn. So the first thing I want to cover before we go into everything is I want to talk about the difference between traders and investors, because these are two words that get bandied together, and I'm going to show you how totally different they are. So when we look at a trader, we're going to work our way down here on the left-hand side. Traders follow trends. Now, if there is not a trend, then a trader can't make any money. There needs to be a trend going upwards or a trend going downwards. Right? If it's a sideways trend, no way for them to make money on a sideways trend. Right? So the trend has to be up or down. Traders work on short-term trades. Now, when I say short-term trades, what they are looking at is they may be trading a minute, 5 minutes, a month, 3 months. Okay, so they will be really quite short term what they are trading on. Trading is very much individual, because one of the things is if you turned around and you said, oh, Karen, what do you think of this? Well, I can tell you now, you've missed the opportunity, because trading is very fast. It is a very, very quick market. Things happen just like that. And you have to make your decisions like that as well. Traders operate from two mindsets. They have the mindset of fear and the mindset of greed. Now, there's nothing wrong with either mindset. Just have to understand what your mindset is, because that determines how you react in a given situation. and it also determines the type of strategy that you should be using. Top traders in the world spend a lot of money working with psychologists so they understand their reactions, they understand how they would think or work in a given situation. And then that helps them set the strategy that they are going to use. Now, when you first start learning trading, 90% of people lose 90% of their money in the first 90 days. So we have this 90-90-90 rule. Okay. You have to be someone who's prepared to lose money if you want to be a trader. Okay. The top traders in the world, the exceptional traders, they get 6 out of 10 trades. Okay, so industry average used to be 7. It is dropping down. This is as more people are coming in. The industry average is dropping. It is now 6 out of 10 trades. And you get those if you're an exceptional trader. I want you to think about, say, basketball or soccer. You know, how many times do you kick in soccer? How many times do you kick towards goal before you actually get a goal? And the same with basketball. How many shots do you take before the ball goes in the basket? Okay. That's what trading is like. You're not going to get 100% trades. You're going to get 6 out of 10 trades. So again, you have to be someone who's prepared to lose money, right? If your mindset says, I've lost this, it isn't working for me, I'm not going to do this again, then that's great, because that means trading is not for you. And I've worked with hundreds of people who are wanting to trade, yet I can say that only 3 of those people have ever had the mindset to be a trader. So be realistic with yourself. You may say you want to trade, but be realistic, because you might not be the trader, you might not have that trader mindset. Now, on the other side, we have investors. So investors are contrarian. That means if the market is going up, they're getting out, they're selling. When the market is going down, they are buying into the market. Okay, so investors go contrarian to what the markets are doing. They acquire assets long term, and I have assets that I've owned over 20 years. Right? They are still doing what they are meant to be doing. So you acquire assets, you're not acquiring them for a short-term quick buck. You're acquiring them because you know that they're going to perform long-term. Investors operate both individually and as team builders. And I have teams that if I didn't have those teams, I couldn't operate. For instance, when I do a property deal, I have brokers who find the properties for me. I have financial brokers who put the money deals together. I have solicitors who do the property deals, put all the contracts in place for me. I have managers who manage the properties for me. They are my team, and I couldn't operate a property portfolio without that team. However, I do invest as an individual as well. So it's both an individual and as a team builder. Investors have to be patient, extremely patient. You see, as an investor, you have no control over what is happening in the market. You have to wait for that market to come to you. So you are planning quite a long time in advance. You could be planning maybe 2, 3, 5 years in advance to get yourself into the position that you are waiting for that market to do something specific because you know you're going to be making a lot of money. So we have to be patient, very, very patient, and we just let that market come to us. Now, as investors, we make money going into a market and we make money getting out of a market. Right? We will use various strategies and tools to make sure that we can make a profit. And when we get out, we're going out because we're making a profit. The market is demanding. The market demands that they want to buy stuff. We're the ones who are holding it. We sell to the market. So we are making money getting out to the market. But probably one of the most important things, there is a difference between a trader and an investor, is that investors create the assets for traders to make money. If we didn't have the likes of Jeff Bezos, who created Amazon, or Steve Jobs, who did Apple, what would you trade on in the share market if you didn't have Apple, if you didn't have Amazon there, if you didn't have the likes of Microsoft? You know, these are the big companies in the world. They were investors who built those companies. They created the assets, and that therefore lets the traders make money. So I hope you understand now that trading is not investing. It's a whole different mindset. It's a whole different way of thinking about the markets, and it's a whole different way of physically working. Good traders can make money quickly, and there's no denying that. If you are a good trader, you can become very wealthy very quickly. However, investors are generally 100 times wealthier than traders. Okay, we create those assets, so we end up becoming far wealthier than the traders. So once you understand that difference now between trader and investor, hopefully you understand what we are looking at, because we're going to be looking at the role of an investor. Now, there are 5 investment categories. We have business, and this is something that is often overlooked by most people, is that a business is your #1 asset. You see, a business is what generates the income for you to be able to go and do all these other types of investing. Shares, digital assets. We have the share markets, cryptocurrency. These are all digital assets, and that is a category on its own. Then we have property, huge industry that's created lots of wealthy people, but we have this category called property. We have the commodities category, particularly precious metals, where we look at gold, silver, platinum, palladium, copper. So we have these 4 categories, and then we have a 5th category. Now I can tell you, I did this presentation. I was sharing the stage with Sharon Lechter, who is co-author of the Rich Dad, Poor Dad books with Robert Kiyosaki. And she was also a consultant to Napoleon Hill Foundation, where she co-authored some more books, brought them into modern times. And Sharon, I was sharing the stage with Sharon, and I talked about this, and I said 4 investment categories. And Sharon said to me, Karen, don't forget the 5th one, intellectual property. So I add intellectual property on here, so I don't get told off by Sharon again. However, I only teach 4 of them, which is business, shares, property, and commodities. And who knows, maybe one day I'll get into intellectual property as well. So let's talk about investment cycles. Okay, so here you've got a circle. We've got the high, we have this low, and then we have this area where investments start moving. All right, so we have this continuous cycle. And it doesn't matter what category of investing you are in, you will have a cycle where it goes up and it goes down. Yet if we look at the four investment categories that I just showed you, business, when there are businesses going down, there are businesses going up. So there are cycles within cycles. Okay, so whenever we look at an investment category, we are looking at what's in favor, what's out of favor, what's going up, what's going down. Okay, so there are always mini cycles within this. So an investment cycle gives us a lot of information. First of all, it helps us to identify what the market is doing, what is going on in the market today. Okay, by studying investment cycles, we are able to understand what is likely to happen next. And that's always really important. So we look at what's happening in the markets now. We're studying when is the best time to buy an asset or an investment. Because you don't want to be buying here when the price is already on a downward turn. You want to be buying down here, ready for it to turn and go up. And we're looking at the best time to sell an asset or an investment. So again, we don't want to be selling when the price is low. We want to be selling up here. We get the highest profit. So let me show you this investment cycle. And this is typical. This is what 99% of the population tend to do. They get a hot tip. Now that hot tip could be the newspaper. And the newspaper's telling you that property prices are going up. We've never had such a high boom. Now is the time to be getting into property. Or you've got Joe Blogs down the street. I hope you have any Joe Blogs listening to this now. But we've got Joe down the pub and he's saying, well, I have this friend and the friend's telling me this is definitely going up. You need to be in this. You've got to buy this now. So they're the hot tips. And this is where people start getting in to the investing. Okay, they're getting in, and there's a very narrow time frame here before that investment will actually peak. Then when the investment starts turning and going down, they're actually in denial. You see, they have been told that this is a hot tip, property's going up, or the share price is going to go up. They know that this is just a little blip because I've been told this was the one I had to get into. So they're actually in denial. And it's only when the price has continued to drop down that they get into the panic sale. And they are selling and they have lost money. And they lose a lot of money. Because they bought high here, they're selling low. And what happens is, because they've sold and they've lost money, when that market starts recovering, they're hit with fear. Because with this fear, they're saying, oh no, I did this once before and I listened to so-and-so and I lost money. Oh, you're not going to catch me out again with this. But then they see the prices going up and up and up, and they get the hot tip. Hey, the newspapers just told them this is the best thing to be in. So they go and buy again. And they find themselves in this cycle of they're buying high because of a hot tip and they're selling low because they're in panic mode. So this is what investors do. So the first thing they're looking at is what are the opportunities. So they are identifying markets are starting to go down. They're not going to pay full price for these investments. They want to be able to make money. So they are going to wait for the price to drop. So when the prices do start moving, they are looking at the opportunities out there. They're looking at what they think is likely to happen. And they've just got their ear to the ground. They're watching and listening to everything that's going on out there. Then, when 99% of the population are in panic sell mode, investors are buying. Because if you buy or sell, there has to be somebody. So if you're selling, there has to be a buyer. If you're buying, there has to be a seller. So when most of the population are in panic sell mode, investors are there buying. They're buying below market value. They're buying an investment that's very, very cheap. And then, because they've bought so low, they get this growth period. And this is where, if you remember from the previous slide, most people are in fear here. They're not buying. Investors are holding on to this and they are watching this asset go up in value. And then when the hot tips come out and the general population are just plowing into this investment, we've got to have it, we've got to have it. Well, guess who's selling and making all the money? The investors, because they have done their work, they've bought when it was low, they've held on as it started to grow, and now they can sell when the demand is high and they can get a high return on their investment. So investors are in the cycle of buy low, sell high. Majority of the population are in the buy high, sell low. So which one do you want to be? Do you want to be 99% of the population, or would you rather be in the 1% of investors who are buying low, selling high, and making money? So what is strategic investing? So first of all, we are identifying what is happening in the markets. We understand where on the cycle the asset that we are looking at, the investment that we are looking at, where is it in the investment cycle? Right? We need to know, and we'll keep our eye on it and we'll wait until it gets to the opportune moment to buy. We study history. Now, history is really important because you might think that everything that's happened here since the 2000s, we're now in 2023, 24, we're moving into, and you may think, right, for the past 23 years, all these things have happened. We've had a pandemic, we've had a boom, we've had a recession, we've had a come out of, we've accelerated a little bit out of that. And, there's all these things that are happening. But the thing is, they're not unique. Because if you look at the 1900s, we had a pandemic, we had a boom time, we had a recession. All these things that we think are unique now are not. They've all happened in the past. And if you go back to the 1800s, you'll see that the same trends happen. And if you go back to the 1700s, there's the same trends. Now, I'm British. I live in the UK. I used to live in the UK until I met my husband in New Zealand. I moved to New Zealand and then came back. Now, I can tell you that when I got into strategic investing and understanding the history, I sat down and I studied recessions in the UK. There are records right back to 1792. And I sat down and I went right the way back to 1792 and I looked at the records. And what struck me is that there's a 10-year cycle in the UK. On average, every 10 years, every decade, there is a recession. Now, what does that tell me for strategy? That means I can plan a lot, 10 years. I can have a lot of planning. I can make sure that I am in the right place at the right time to make money. Because I study history, I look at what happens. And then when we look at the pandemic, after the pandemic in the 1900s, the country went into a boom cycle. However, this time we had the boom in the middle of the pandemic because the government made money available to people. And so they were investing in their properties. This triggered a boom period in property. And property is now going down. Okay, when you're expecting other things to go up, we've already gone into a recession within 2 years of a pandemic. Whereas in the 1900s, it was a bit longer. But we identified what governments did. We identified the trends. And because of studying those trends, we could see that we were already in a boom time when people were saying, well, when we come out of this, there's going to be so many years before a boom time. It didn't happen. We already knew that boom was happening. Okay, so history teaches us a lot. Can't stress how important history is. We look at what are the risk levels within each market. So we want to know where on this investment cycle the market is, because then we can identify the level of risk that we are at and how do we manage that particular risk? How are we going to deal with that risk? How can we mitigate it? What strategies can we use so we don't have the exposure to that risk? Where are the opportunities? Well, we're only going to make money when we find those opportunities. So we keep looking and searching, and we know there are things that we want to keep an eye on. So we are very much studying where those opportunities are. And then we look at what is the best strategy for the economic climate. There will always be something going up and something going down. What should we be looking at now? So let's have a look at business, and I'm actually going to do a case study with you. And when we look at strategic investing for business, where are we today? So the current situation, as I'm recording this, the current situation is that we've got extremely high inflation. Okay, so when we look at businesses, especially high street businesses, they have high overheads. Their sales are low because there's no money to buy at the moment. And the only thing that they can do is reduce their operating costs. They do this through closing stores, and they do it through laying off staff. Okay, so this is the situation with business at the moment. We see unemployment starting to rise. Now, you might be getting data coming through saying, we've still got this happening and that happening. There is a lag between data being released and what is actually happening. Okay. Office of National Statistics, they release data usually, depending on what you want, it could be 2 months or 3 months delay before that information comes out to us. Not much good when we are wanting to be on top of what's happening in the markets. In America, I know that the data that is released that the Fed uses for setting interest rates, that can be up to 12 months behind, sometimes even 18 months they will go back and adjust figures on there. So when we're looking at what is happening, we're seeing the unemployment and we might think, okay, this business is going down at the moment, but we are seeing that unemployment's going up. just remember there's a lag on that data coming through. So what are the opportunities for us out there? Well, if you're online, you have a huge, huge audience, and you should be able to find someone who wants to buy your product or your service. Okay, so when you're online, you have a bigger audience that will help to mitigate some of the loss that will happen in a recession. Oops. Network marketing. Now, if you are a network marketer, you will be coming into a boom time because as unemployment rises, network marketing grows because people have lost their job. They want to know how they can make money. They can't get another job because there's no jobs around. They want a way of making money. And network marketing becomes one of the go-to industries. Okay, so if you have a network marketing business, this is the time that you are recruiting. You build your business. So for network marketers, you'll be coming into your prime time for your business. Fast food outlets. People still like to eat out. Yeah, but they can't afford to. They don't have the money. And so fast food outlets, which are cheaper, means they can go and take the family, buy a treat, get some takeaway or whatever they want to do. They have an opportunity to still enjoy a time out, but at a lower cost. So fast food outlets become an opportunity. I love fish and chip shops because I don't know about any other country, but in the UK, fish and chips have been part of the staple diet for many, many years, for lifetimes, generations. And fish and chips are much cheaper than going to, say, Pizza Hut or going to a restaurant. And fish and chip shops get a boom period when we're in difficult economic times. They are a fast food outlet. Okay, so watch your fast food outlets. If you're someone who wants to be in the food industry, you want to have a restaurant or you want something fast food in difficult times, have both. A menu that you can do that you can upgrade, make it a little bit more elaborate, but you can sell your fast foods from the front of the shop. And one of the areas that has huge growth opportunities is mergers and acquisitions. Because as businesses start to fold, as they're coming down, there is a big there's a big opportunity to be able to buy businesses under value. And that's when mergers and acquisitions come in. And at present, you see this red X, this is where I believe the business is. So we are very much coming into the merger and acquisition area. So if you want to grow a business and you're wanting to grow it, add different parts into your business, it'd probably work out cheaper as we're going into this low time for businesses. It's probably much cheaper for you to add onto your business through mergers and acquisitions. So let's look at this case study. Jane was a client. She was a Reiki practitioner. The market situation is that we're in the pandemic and businesses are closed. Jane's business is high risk. Her business is shut. And because she's a hands-on business, then her business actually stayed shut longer when other businesses opened. So it was an extremely high risk situation for Jane. The situation for her is that she wants to be a stay-at-home mum. However, hubby doesn't make enough money to support them. They have a couple of kids, and so she has her Reiki business. Jane also suffers with depression and she wants alternative income sources. So the problem with the Reiki business was that Jane could operate that when she was feeling well enough to be able to do that. However, when Jane is in a depressive situation, she has to close her business. So her business is start, stop, start, stop. So what we wanted to look at with Jane was how could she come up with alternative income sources? And what we discovered is that Jane actually has a very loyal customer base. She's loved by her customers. So by looking at research and understanding where we were in the investment cycle, we decided that one of the best things for her was to open a network marketing business in essential oils, because essential oils is something that she might use in her business. And her customers, what she did was she worked with her customers online and she was showing them how to mix these oils together and how they could massage them and the aromatherapy effect of the oils. And her customers had the opportunity to either buy the oils and get them delivered straight to them where they could make their own stuff, or they could become a distributor and buy the oils at a reduced price, as well as then sell to other people. And a lot of Jane's customers actually became distributors. So she was ending up with quite a viable network marketing business that was generating income for her. And now that she was back to making some money, we then looked at properties because she wanted more property. She had property. She had a couple of properties and she wanted more property. So what we did was we used lease options to acquire more money. Then we set to acquire more properties. Then we set up investments so she has the cash to buy the properties with no mortgage required at the end of the lease term. So we were balancing out, she could build up these investments as she has the lease property, give some time for those investments to accrue in value, to grow in value, and then she would have sufficient cash within those investments to go and buy those properties outright. So we balanced everything out for Jane so that she was able to become a stay-at-home mum, which is exactly what she wanted in the first place. This is Marilyn. Marilyn is the director of Equip You. So Marilyn says, Karen has caused before I read this testimony out, I want to explain that Marilyn wanted to have a holiday park. That was her dream, was to have a holiday park, and she didn't have sufficient money. So what we did with Jane was with Marilyn, was we looked at what was happening in the markets. And as I said, one thing is always going up as another is coming down. It's like it's on a pendulum. And Marilyn started buying garages. So she was buying garages very low. She was then selling them, made money, was then able to go and buy land to start building her holiday park. And Marilyn said, Karen has caused a paradigm shift in my own thinking about business, and now a whole new future lies before me. Karen changes the lives of those who are ready to take action. She makes wealth accessible to everyone. So we've had a look at business. We know where business is at the moment. Now we're going to take a look at residential property. I will stress this is residential property. Again, lots of different properties in the market. We're looking at residential here. So the current situation. This has been a boom period for investors. Okay, so investors have been able as interest rates are going up, as inflation is going up, then investors have been pushing interest rates up, pushing rents up. So they're making quite good money on property. It's been a boom time. For homeowners, though, it's been a difficult time because they have higher mortgages. That means their repayments are higher, and it's becoming more difficult for them to actually make those payments. Repossessions have started to go up, and that's where homeowners have been struggling to make their payments. So what happened in May this year is the government stepped in and they put a ban on repossessing property for owner occupiers. So that means if you own your own home with a mortgage on it, and this is in the UK, the government stood up in Parliament in May and said that they were going to stop mortgage companies from repossessing properties. Now, this is where history becomes really important, and we've already spoken about history and understanding how governments react in certain situations. So the government standing up and saying there's a ban on repossession for owner-occupied properties means that it's not the first time they've done this. They did this in 2008. They did it at the beginning of the end of the 1990s, beginning of the 2000s. They did exactly the same. So what do the banks do? Well, the banks then switch from owner-occupied repossessions because property is a liability on their books. They want to get rid of this risk that they have. They are trying to manage as well. So they actually shift to repossessing property for investors. And the thing with this is that in mortgage clauses for investors, they can repossess, banks can repossess a property at any time. They don't need to give you a reason. They can just appoint a liquidator to come in and repossess that property. So in 2008, there was this boom going on to become investment property, residential investors in property, but people were losing their properties. And we're going to look shortly, I'm going to give you an example of why that happened. So we are currently in a very high risk area for residential property investors. So what are the opportunities out there? Well, you might not think of it as an opportunity, but you need to reduce mortgages. Okay, we need to bring those mortgages down. The other thing is we do have the opportunity to take profit and sell. If property prices are higher than what we paid for the property, we can sell and take some profit off there, protect the asset. We can acquire more property using options, which means that we can maintain a property portfolio, but we're not at the risk. We may lose some properties, and some properties might be repossessed, but you're not going to lose your portfolio because you've got property options in there. You could do joint venture cash deals where you could do a share on the property you have for someone who's prepared to put cash in and use that money to reduce your mortgages. You could diversify into other property markets because there's always something going up and something's going down. We've got this tilt going on. Be ready with cash to buy repossessions at auctions. Okay, huge opportunity when these repossessions are going through. The properties are sold at rock bottom prices. This is where I believe we are at the moment. This would be where we were round about here before we went into the lockdowns. This is where the residential property was. There was fear that that was actually at the top and it could start turning, but the lockdowns caused this extra growth in here, and now we're back at the area where that growth has been wiped out. So let's look at a case study. Mike is a property investor. Now, we're looking at the market in 2008 where we had a drop in property values. So we've gone into a recession following the credit crunch. We've gone into a recession and property prices drop, and property prices go down depending on how deep the recession is. It can go anything from 25% in a soft market to 50 to 75% in a hard recession. Okay, so Mike actually saw a drop in the property values, and he was high risk because he had a severe exposure on buy-to-let mortgages with a loan-to-value clause. And this is something I want to stress, is loan-to-value means that when you buy a property, if you buy an 100,000 property and you have a loan to value mortgage of 85%, the bank gives you 85,000, right? You have an 85% loan to value. Now, if your property value drops to 90%, you're expected to bring your mortgage down in price so that it doesn't go outside the 85%. If your property goes outside that, if your mortgage goes outside that, and you have that loan to value clause and you're now more at 90%, that is one of the clauses that the bank can use. It's an excuse it can use to get the properties off their book, get the liabilities off their books, and balance their own books out. There was buy-to-let mortgages on all his properties, and that meant that this loan to value clause was actually used at the time. The outcome was he lost most of his property portfolio through the loan to value clause on the mortgage contract, with properties being repossessed and sold at discount prices. He then had the lenders chasing him for cash because the properties had been sold, they'd lost money, they went after him for the money. So the current situation, Mike has rebuilt the property portfolio using options. He has investments so he can pay cash for the properties at the end of the option term. So just a testimonial here of Steve. And Steve found himself in a situation where property prices were dropping and he was in negative equity. So we had to look at a way to get his property out of negative equity. He was engaged. Between him and his future wife, they had 4 kids, and the property that they had was too small for them. So they needed a larger property. And he couldn't sell the property because of it being in negative equity. So what we did was we set up a lease option and found a couple who wanted to buy the property at a price in the future. They were happy with that. He was able to sell his property with the lease options to make money on make money on his deal. So Steve said, amazing, I learned things I'll never forget that helped me through the pandemic, sell my house with lease options and get rid of 25K debt. Grateful as always. So now that you understand, we can look at investment cycles and we can determine from those investment cycles what is the best investment to get into and how do we make our money in those cycles. So I'm going to go through now, if you're interested, if you're still with me, if you're interested, how I made 10 million in 4 years. So this was my situation, right? I was coming back to the UK, and I was coming back because my mum had died. I was coming back for the funeral. I lost 6 members of my family in 8 months, and so I was here in UK, and all I was doing was hospitals and funerals. Uh, And that gave me a good opportunity to start looking at what was going on. And UK was just coming out of a recession, and business was starting to grow. There was a little bit of what we call green shoots showing in the business market. In the property and share market, these were still at record lows. So property was extremely cheap and shares were extremely cheap. So this is the background that I was coming into to make my money. And my situation was that because I had come out here living in, actually, I'd moved recently from New Zealand to Australia. My husband and I had decided that we wanted to be investors, and the New Zealand market didn't offer us what we wanted, so we were going to Australia. And we were still in transit of moving our furniture around and moving all our belongings, if you like, from New Zealand to Australia. And that was when my mum died and we got back to the UK pretty fast. So I found myself with no money, uh, and I went and got a job, a minimum wage job. I needed something that was stress-free. I could do it with my eyes closed, my hands tied behind my back, and there was no, I wasn't concerned about anything. My husband came in, he's a New Zealander, he came in on a tourist visa and was not allowed to work. Okay, so I had to work until we were able to get his visa changed, and that allowed him then to have a job. So I got a minimum, I had a job, minimum wage. So the very first thing I did was I looked at what was going on and I saw that the markets were coming out of recession. So I set up a network marketing business. I was working full time, network marketing business, but I actually set up two. I did Avon and I did Clean Easy. Now, these were catalog network marketing businesses. So all I had to do, put catalogs in a bag with order forms, deliver them to houses each day, and then I would pick up the orders the following day and put my books out in another street. Now, we were really keen to get into the property market, and so my routine was that when I came home from work, I then we'd have dinner. We would then go over to the shopping centre where the estate agents were. On the way over, we'd take a certain road and we'd deliver all my catalogues. And on the way back, we would take whatever street that I'd dropped my catalogues in the night before, and we would pick those catalogues up. Okay. So I started making money. This was my side hustle. So I had extra money on top of my job. Then what we did with that extra money is the share market was at lows. And so what we did was started investing the money that I was making in the side hustle into the share market. So I bought shares like Core Steel. At the time, Core Steel was down at 1 penny, and it had, most people were saying don't buy. However, when I looked at it and I looked at watching what was going on, the signals that were there, I believed the Chorus were going to be able to pull themselves out of the difficulty they were in and bring their share price back up. They duly did that. Okay, so although the shares were at 1 pence, I could not buy them. It still irks me today that I had to pay 2p for those shares. So I got Chorus at 2p, and then I was able to sell when the share price recovered, and I sold the shares at £4.56. Okay, so I did that with a lot of companies. Rolls-Royce were down at 9p. I sold them around 150. Tullow Oil were down at 69 pence. I sold them at £12. So I was building up cash simply because I was looking at the companies, seeing how low their share price was, and thinking, yeah, if I get in now and they go up, I'm going to make all this money. So that is how I was making money as well. So I had income coming in off my network marketing businesses. I had capital growth that I was generating through the shares. So then the next thing we did was we started looking at property. And as I said, property was still at record lows, and we went to auction. At the auction, well, actually what we did was we negotiated on our first property, which was the one we ended up living in, and we were able to do a zero deposit. We didn't put a deposit down. We got the seller to gift us a deposit. It was called a gifted deposit. And they gave us the 5%. We had a 95% mortgage off the bank as a first-time buyer in the UK. And so what we were able to do was get a property that cost us nothing to get it, except for £300 that I had to pay the solicitor. And I had an old credit card that had £300 on it, which I had used. I'd kept it when I'd gone to New Zealand to live, and it's actually at my mum's address. So I had a UK address still for it. And as a result of that, my mum, sorry, not my mum, but my card had kept a balance on it, and it had gone up a little bit. So I was able to borrow the 300, pay the legal fees, and get the property with nothing, no money down at all. Now the property was actually undervalued. Street value was 65, and we managed to get the property at 39 with a 5% gifted deposit. Then what we did was we knew the property needed work doing to it. So the first thing we did was go right through the inside, painted, decorated it, put a shower in instead of a bath, and we just made the place look more at market. We got the property valued at street market, or street level, 65,000, took an 85% mortgage on it, repaid the mortgage that we had borrowed to get the house, and then all the cash that we made from that, we went to auction. And the very first property deal we looked at, it failed. It actually reached 7,000 in the auction, and it passed because it hadn't reached reserve. So we went up to the auctioneer at the end and we said, look, we're really interested in this property. It passed at 7,000. How much will they take for us to buy that property? And the price was 7,200. So we only needed 200 over that price to get the property. We had the cash, we paid cash for it. Okay, and we were able to then renovate that property. Once we brought that property up to street value, which at the time was 35,000 in that particular street, we mortgaged it, we took the cash, we went back to auction, we did exactly the same thing again. And we just kept repeating that process. And of course, we were making more and more money and holding more and more cash. And we were able to get 60 properties in 4 years. Not only were we able to get 60 properties, but the market was turning now and property prices were going up. So most of our properties that we had been buying, the 7,000 property we bought, which we took up to 35,000, was now valued at 85,000. The property that we had bought to live in, that we had bought at 39, had it revalued at 65, was now worth 120,000. Okay, so you can see how we're building all this cash, this equity all the time, simply because we bought when the market was low and we were coming out. And the next thing we did was we started investing in gold and silver. Silver was down at around $8 and we sold at $42. This is US dollars, gold and silver use US pricing. We were buying gold between $400 and $600 and we sold the gold at $1,892. So we just kept our money working for us. My minimum wage job kept money, kept the roof over our head, food on the table, and then the side hustle generated the income that allowed us to go into the shares, allowed us to go into the property, and allowed us to hedge. Okay, and that was how we created 10 million in 4 years. In fact, I retired in 3 years, and we were wealthy enough then that I didn't have to work again. So it's all about understanding strategically where the markets are and where those opportunities are. So this is what we did. We looked at those opportunities. We were watching them, we were studying them, making sure that we understand where the market was at the time, understood where the market was at the time. We then started buying. And we watched that growth come through. And then when everybody else was coming into the market and really pushing that price up, we were selling and moving on to the next investment opportunity. So I want to talk about the masterminds that we do, because this is where I teach clients how to use strategic investing and how to understand what is going on in the markets. So you get to learn in our masterminds, you're learning strategic investing and you're learning how to understand the markets and know where they are at a time. And look at what is the best strategy to maximize the markets. Learn how to build cash-rich online businesses. That's going to generate the income for you, and how to grow using mergers and acquisitions. So when property is low, what can we add on to existing businesses through mergers and acquisitions? Look at shares, how to grow a share investment portfolio, and how to grow for either capital growth or income. In addition, look at growing international property portfolios using mortgages and/or options, and how to protect those investments through bullion. Market news is a part of being in the mastermind group. You get access to the market news report. This is something I run each month. And what I do here is I explain my interpretation of what's going on in the world, how that's going to impact our markets. And an example of this is New Zealand had a cyclone that has decimated their crops that they would grow, which means that when they're ready to export those crops normally, which would go into our market, we won't have those crops. So that hit their apple market, their pear market, the kiwi fruit market. It was a huge devastation. That has a flow-on effect. That means that trade out to the rest of the world isn't going to be there for the New Zealand economy, but also for the world, because we'll be facing food shortages. So that's an example of some of the things that we can look at and how we see, okay, where are the investment opportunities in this, but also what can we do to mitigate that, to make it less of an impact on ourselves. So these are some of the things that we cover in here. And then I share what I'm doing at the moment, how I am changing my strategies depending what's happening in the market. So most people would say, oh my goodness, wouldn't it be nice to have a crystal ball and be able to see into the future? Well, when you understand strategic investing and when you start studying history, you are actually able to see the future because you know that this is coming and this is likely how the governments are going to react, how people are going to react. So we can understand what is coming in the future. And because we understand what's coming in the future, we are able to see the opportunities that are going to be there. So we can position ourselves and say, well, I know that 3 or 4 years down the track, this is likely to be what's going to happen. I'm going to be ready because I've been looking for those opportunities. I'm going to be ready for them. And that means that you will always be in the right place at the right time to take advantage of what opportunities come your way. So a testimonial here from Amanda. Amanda's a writer and creative artist. She's a member of one of the joint venture investments that I run, and she's also a member of what we call the Zero to Millionaire Club. And Amanda says, I love your market news meetings, Karen. Thank you. So much value and information, and we certainly do cover an extensive discussion list. So joint ventures actually form a huge part of what we do with Karen Newton International and through the mastermind groups, the training that we run. So the joint ventures that we currently have going, we have some business joint venture opportunities. We have US share trading clubs, investment property, and coming we have gold and silver. So I'll be launching the gold and silver investment joint ventures shortly. So as you can see, we're trying to cover all 4 categories and make sure that if you're someone who perhaps doesn't have the confidence to go out and do this on your own, that you have the support and you can do this in a joint venture group. So what are the benefits of being in a mastermind? Well, one, you reduce the risk of failure with investments by having the right strategy for the current economic situation. That's what Market News is all about. It's a live session with me on a monthly basis where I'm looking at what's happening in the markets and I'm showing you so that you can plan around what you do so you are ready for what is coming. You can increase your investment opportunities. We have members who have come together and they've joint ventured together. And I know that ladies are very good at joint venturing, men are not so good at certain types of joint ventures. So we've had some guys that have come together and done some things, and that's proved quite successful for them. You are able to joint venture with like-minded people. So you know that you're doing the training, that the people that you are going to joint venture with also did the same training. They have the same mindset. They understand the process. And so you're all on the same level, thinking exactly the same. You increase strategic alliance opportunities. So you can work with more and more people, you can build those alliances, and then you are able to increase the opportunities that are out there for you. You get to build multiple income streams. Now, if I go right back to the beginning of my presentation where I had the car crash and I had no job and I had no income, it was because I was reliant on one type of income, my job. And when I lost that income, I then had to find ways of making alternative sources of income. So I was building multiple income streams. You build your investments in a friendly, supportive environment. So you get to talk in our masterminds about what you're doing. You can ask people for advice. You can ask me for advice in these groups. And everybody has an opportunity to say what they're doing, where they are, and what they would like to do next. You get to test your ideas. So you've got a group that you can actually test those ideas on and say, well, you know, what do you think of this? Do you think this would work? You can do your market research with the people that you are in the masterminds with. And you get to pool resources. So by pooling resources, you can get into deals that maybe as an individual you wouldn't have been able to do, but by pooling those resources, you can now do those deals. And ultimately, we get to increase the time spent with family and friends because we're not on a 9-to-5 job. We are not then trying to do stuff on the side. We are creating investments that run pretty well. We're setting them up so they're automatic. And by doing that, we can then increase the free time that we have. Now, by increasing the amount of free time that you have, you're also able to increase your health and well-being because you've got more time to look after yourself, you've got less stress, you're enjoying life a little bit more. So that's some of the benefits of being in a mastermind. Well, I shouldn't forget the obvious of increasing your wealth and income. So if you would like to work with me and come into one of my mastermind groups, then this is what you would actually get. You get coaching directly with me on a monthly basis. So we meet once a month. It's a 2-hour session. We have limited numbers in the group so that everybody gets a chance to ask their questions, give us updates on where they are, if there's any problems they're having, what can they do. You get a monthly meeting. This is a 1-hour meeting with me where we go through market news report. You get my goal setting system. Now I'm going to say here, the word system will keep coming up all the way through this. It's actually the process that I use, okay? So when I say system, it's just the steps I go through. So don't think it's going to be anything too drastic. All right, so you get my goal setting system, you get my planning system. You get to learn how I analyze the markets, identify where they are on the investment cycle, and the indicators that I'm looking at out there in the markets. You get to learn different strategies for different parts of the investment cycle. So one strategy, if that is all you are using, you will set yourself up for failure. Right? You have to adjust your strategy depending on what's happening in the economy, and that depends on where we are in the investment cycle. You get my risk management system, so you're learning to balance out your investment strategies. You get my forward planning system. So this is where always want to be prepared to take advantage of the markets. Okay, so we are looking ahead and identifying where we want to be in the future. You get the business growth system. So this is my system for how I grow an online business organically, but also if you want to do acquisitions and mergers, then we go into quite a lot of detail on acquisition and mergers. You get my property system, so learning which strategy works best at which times and how to apply them. You get my share system, so you're learning when to use income generating and or growth strategies. You get my crypto system, so you'll learn how I make money every single day using cryptocurrency. You get to learn how to protect your investment. So this is how I hedge through bullion. You get to access joint ventures. So as I mentioned before, there are joint ventures in business, property, shares, and bullion. So you get access to those joint ventures. And clients who work with me, they pay $15,000 a year to work with me. Now, what I'm going to do, because you're here today, is I'm going to offer a free bonus. This is called Zero to Millionaire Building the Foundation. So this is your free bonus, and it covers a lot of the basics so that you get the foundation in place, and that helps you to understand more about what we're doing in the masterminds and how to build out your wealth. And so what you get with the Zero to Millionaire Build the Foundation, which I'm throwing in as a bonus, you get to learn how to start an online business, monthly income dividend share investing, so we're generating income every single month. You learn how to create multiple income streams. You'll learn about the compounding effect, why that is so important, and how we can accelerate that and make it really beneficial for us. You get to learn about leverage. The more we can leverage, the wealthier we can become. Learn the system for velocity banking, which will allow you to reduce mortgages very quickly. Learn about property investing, peer-to-peer lending and crowdfunding, cryptocurrency. You get an introduction to trading, and you get access to the market news. Plus, you get access to entry-level joint venture opportunities. When I say entry-level, these are ones that are lower value so that you can put smaller amounts of money into them and still be part of joint ventures and start growing your assets through the joint ventures. That costs $780 a year to be part of that, but I'm throwing that in today as a free bonus for you. So to work with me, I'm just going to recap what you will get. You will get coaching directly with me on a monthly basis. You'll get the market news meetings, again on a monthly basis. You get the goal setting system. You get the planning system. You get to analyze the markets and identify where they are on the investment cycle. You get to learn different strategies for different parts of the investment cycle. You get the risk management system, so we're balancing the investment strategies out. You get the forward planning system, which means you're always prepared to take advantage of the markets. You get the growth business system. This is how you grow a business through organic and through acquisitions and mergers. You get the property system, so you can learn which strategy works best at which times and how to apply it. You get the shares system, where you learn to use income generating and or growth strategies. You get the crypto system, where you learn how I make money every single day on cryptocurrency. You get to learn to protect your investment, hedging through bullion. You'll get to access joint ventures in business, property, shares, and bullion. You get a free bonus, which is the Zero to Millionaire Building the Foundation. So you will get everything that's in that course in addition to all of this. And that total value comes out at $15,780. Today, though, you will get that for $1,997. And there is a payment plan available. We'll say with the payment plan that you do need to make a minimum of 12 payments. So you can sign up with me now, either by using this QR code, or you can go to https://courses.karennewtoninternational.com/mastermind. If you click on that, it will take you to this page where you put your name and your email address in, and then you have a payment option. It automatically defaults to the $1,997 a year, but then you can go on the payment plan. So just click that, it will change for you. And you just choose whether you want to pay with a debit or credit card, or if you would like to pay through PayPal. Tick that you agree to the terms and submit the form. Okay, that is Simply all you need to do to sign up for this course with me. Now, everybody has choices that they make in life. All the way through life, you choose things. You choose the friends that you made at school. When you were at school, you were choosing your friends. When you grew up, you chose whether you went on to university and you chose what you wanted to study. If you went into work straight away, you chose the job that you wanted to go into. You chose your friends that you would make in life. You choose your partner. You choose where you want to live. And now you have the opportunity to choose that you want wealth, you want income, and you want lifestyle. The three choices that Karen Newton International is able to offer you. I choose to live here in Spain, in this beautiful coast, right on the sea, enjoying lovely blue skies, probably 11 out of 12 months of the year. 330 days is the average. I choose to have my place in the French Alps so that I can go skiing when I want to go skiing, or I can enjoy the place in the summer. That is my choice. I've chosen these. I chose to have a Ferrari, even though my husband drives it most of the time, but that was a choice. We chose that. And I choose to have the boat so that I can enjoy this water, my lifestyle, sometimes the solitude. Okay. What are you going to choose? What do you want your life to be like? And it comes down to the choices that you make. Tony Thomas, the client, Tony is a certified and independent financial advisor, 4 times Financial Times, a top 10 IFA in the UK. And Tony was a bit curious. He was already an IFA and he was a bit curious. He wanted to know what I was doing to make sure I was above board. So he came along and he joined my course. And Tony left this testimonial. Karen is a great coach on how to build wealth through her mastermind groups. Karen shows you a number of different strategies, starting with very little money, on how to build income and capital in a friendly, supportive way. I have no hesitation in recommending Karen if you want to learn how to build wealth. So the choice is yours. You get to choose the amount of wealth that you want to create. How wealthy do you want to be? You get to choose the income you want. Now, your income choice could be an extra 1,000 a month. It could be 10,000. It could be 1,000,000 a month. You get to make that choice. And you get to choose the lifestyle that you want. And that can all start with choosing to be part of our mastermind group and learning how to build wealth, how to create the income, and how to invest so that you get the lifestyle that you deserve.